It's Thursday, and it's the 30th, and it's about 2:25 afternoon session, New York. Hell of a week. Started off a little rocky, and I'm just gonna start exactly from where we left off in the last video. Last video I was pretty tight, but I did outline what we were looking at for gold coming into, I guess, pre FOMC, and I guess now we see post. So the last video, you can look at it now, but I essentially had, I think this was the price action at the time. I think we were like right in here. Yeah, we were like right around here. And we were pretty much basing off of H4, and we were pretty much looking to just track this next move because we had this counter trend line break, we had the rejection off the 50 on H4, we broke up, and we were looking for the potential retracement. So following up from that, I mean, you can see how this is just the perfection of how things are looking to go on this asset class. So I was able to actually make back my losses and then some. I really didn't have, I ended up actually getting out. It was only like 100 or something pips. I ended up closing out. Our entry was 27, 47, 47. We ended up running, we closed out before this session. It was like right in, it was before 5 o'clock. But we ended up just bailing because I was content with how this thing flowed. But we certainly did not capture the move the way that I thought. I had some other things going on, and just monitoring a position, it would have been an easy position to monitor in hindsight, but with this amount of chop, and I started looking at things a little different. So yeah, this thing played out absolutely perfectly. So we'll go back to what we're looking at in the overall aspect of the market. So we'll remove this counter trend line. So let's get right to it. So originally we were looking at the point A, point B. Price originally came into the 50%, and that's where our early week entry was looking to be, around the 41 region. We had this, it remained valid, and we missed this push up for about 270 pips. Fine. As I mentioned last video, the solution, or the next phase in this entire move, was going to be based on the counter trend break, which took place, and the next step, once again, move within a move, projection within projection. We were looking to ride the wave of FOMC into gold all-time highs, which have been reached. We're coming into, I think, the high 2798. We're almost at the 2800. That should bring completion by tomorrow. But there was some details here that I was looking at. So I don't know if everybody uses TradingView alerts. They're very clutch, very good, and you can have them on your charts, and you'll get a notification when price is actually crossing where you're looking to. So what I'll do a lot of the times is I will base my alerts around these fib levels. As you can see here, I'll base my alerts around these fibs, and then I'll get notified when, retracements are happening, and then I'm able to make a decision whether I'm going to enter or not. So I'm already glued to my charts anyway on mobile, but it helps kind of try to disconnect, but I'm very well involved. So you can see what ended up happening was a retracement started after that move. After I recorded, the following session ended up giving us a nice retracement into New York. So this starts the New York session at 8 o'clock. And, pre-FOMC release at 2, we saw price start to correct itself and came into this 61.8. So our original, and this is where it's counterintuitive when it comes to, as a trader, we're all taught to, essentially buy when price is going up and sell when price is going down. But how you get really good entries truly is you almost have to buy when price is going down and sell when price is going up. Now, there's nuance and caveats to that. I don't want you to just be an amateur in this sense. So I took my position because I'm looking at this from a logic-based perspective, where I'm looking at this thinking there's very minimal chance that anything is going to be released that is going to break under this trend line and realistically under this wick right here. This wick was the thing at 27.34 that was holding this entire move up as far as I'm concerned. So when I'm tracking this, I'm seeing these wicks. Eventually, the news release did come out at 2 o'clock. Chair Powell did speak at 2:30, and as he was speaking, price ended up making this wick. Now, there's other data and other information that I was looking at. So the little bit of understanding of financials or fundamental that I do have, I understood that with a rate pause, and now you can Google this. I Googled rate cuts. And it literally said, I think in the New York Times, the Fed is set to pause rates before the news release. So now, okay, we're not cutting, we're not raising, everything's staying the same. Typically, and because President Trump is looking to effectively cut rates at a certain point, and that's the sentiment that he's given. I don't know what his kind of temperament or time frame is, but he is a very low interest rate kind of president. So with that being the case, you have a pause, which gives the market confidence that eventually there will be lower rates and rate cuts moving into the future. So what ended up happening was the pause happened, markets reacted to it, and we subsequently had dollar weakness throughout this entirety of New York session today. And our entry was based on the news spiking down. 27.47 was my entry. We ended up bagging 100 pips. It was about like 110, and maybe a little more actually. I gotta look, but it was about right here where I got out, and obviously could have held this position. Wasn't my best decision to close because I had my stops in profit. I could have just let that roll, but I'll tell you why I got out in a second. But that was my justification for entering. So when you're looking at something like this, your fib is really going to be the thing that supports you in this uptrend structure. Now, we already had other technical elements. We had other technical elements to this, as you can see. Sorry, I just had to take a brief pause. So the technical elements that were associated with this was a counter trend line, a fib, point A, point B, news ran right into 61.8. So in my entry in my head here was the 47. Let's get as close as possible. So I was looking at realistically, I was going to extend a little past 100 pips, God forbid. I was comfortable with the loss. I actually dropped my lot size a little bit to kind of account for that in the event that this happened. But, we really didn't get too much drawdown. I mean, if you're... I don't see many people pulling a 1-17 projection, I mean, with the drawdown that you got. And now this is obviously after the fact, but, I mean... 27 pips of drawdown for a potential 490 pips. Come on, bro. I don't even need to say much. Like, this is just ridiculous. And, the entry you would have had, depending on your trade management earlier in the week, I'll remove this alert, would have been in the 41 region. This was the original entry. I mean, it really, this is just, I'm speechless. I'm absolutely speechless. And you really didn't encounter that much drawdown, all things considered. So it was a very successful week. We took a short-term loss. Yeah, and now my trade management in this actually wasn't the best, all things considered, too, because I didn't capitalize on these moves like I was supposed to. My mental was really not shattered, but my mental was off a little bit when this move was missed. Frustrated me. I felt like I was chasing at this point, and in this case, I was just happy to make back my loss and get my equity back, and could have been a lot more. and there was also opportunity to enter actually in this. So as this move was happening, the continuation of this would have been point A, point B on the fib after session, and this would have been your continuation entry based on your 38.2 region. And you know, once again, had your order been, you know, were active orders in 27.47, position could have been entered here. You're only looking at, say, a 60 pip stop, which in that case you would move your stops up under here, which, hoping that your first order, you would have to do the math on it, but your first order entry would have essentially canceled everything out, because if your stops are under here, you're at 60 pips, 60 pip stop, you're essentially break even on the position. So that's where you can really start to risk, and that's, once again, that's going to be another video for another day. But even if you choose to get in on this second entry, you're still looking at 350 pips before PM session. So it was a very fruitful week overall. Very, very good week overall. Came out positive on the equity side of things. And now, once again, just to be clear, I want everybody to see the projection. So H4 projection, I've said this every video so far, projection within projection. This H4 50% has still not completed. The completion of this move will be 28.11. Full completion is 28.45. So there is still a considerable price range, you know, a 530 pip price range from this active price for full completion of this move. So keep that in mind when you're looking at H1. We're looking for next week. We're going to do a couple things. We're going to retrace. I'm assuming or anticipating a pretty sizable sell-off from wherever this level. I mean, we still have another day left. So wherever this lands, I mean, we could land up here. Who knows? But I'm anticipating a retracement into potentially these levels, this 27.65. At that point, I would be looking to re-enter to continue the move. And we're going to base everything realistically. 0.1, 2, 3. The buys would be invalid in the event of this current trendline break. It would be invalidated temporarily. At that point, we would look to get back in the event of a counter trend break to the upside. So we have all of our if-then scenarios kind of mapped out here. And yeah, we are looking to capitalize on the next move. Overall targets realistically is 3,000, but that's going to take a little bit to get there. Short-term targets 2,800. Fib targets are your 28.45, and we're going to continue to track this entire trade as it progresses and we create new highs into the new year. This has been a great January. February, March, April is going to be where it really kicks up, and I got some really cool stuff. You know, I'm looking to go a little different in these next couple months. You'll see. So we're going to be doing a pretty effective build, and we got some cool stuff coming. So that's pretty much it. This has been absolutely perfect. We're going to continue to track this position, and yeah, that's been an update for Thursday the 30th. Sir.